Good morning, good afternoon, and good evening, depending on where you find yourself in the world. My name is Sophia Arend, and I'm a senior analyst at the Global Blockchain Business Council, also known as GBBC. It's my pleasure to welcome you to this morning's GBBC Virtual Members Forum with GBBC members Steptoe Johnson LLP. For the coming months, the GBBC has been and will be hosting these bi-weekly webinars to showcase the innovative work and thought leadership of our members around the world. Today, we have the pleasure to be joined by Alan Cohn, partner at Steptoe Johnson and co-chair of GBBC's Legal and Regulatory Committee, Jason Weinstein, partner and GBBC Regional Ambassador for the US, Shawn Davisson of Counsel, and Katie Dubyak, associate at Steptoe Johnson LLP. They will be presenting and leading a live audience Q&A on US regulatory enforcement trends. Just briefly before we begin, I would like to provide some background on today's presenters. Alan Cohn counsels a range of blockchain and cryptocurrency related issues. In addition to co-leading Steptoe's blockchain and cryptocurrency practice, he also leads the firm's national and homeland security practice. Before joining Steptoe, Alan served as a career official in senior policy positions at the Department of Homeland Security for almost a decade. And most recently, he served as the Assistant Secretary for Strategy, Planning, Analysis, and Risk, and second in charge overall at the DHS Office of Policy. Jason Weinstein conducts internal investigations and represents companies and individuals in high-profile criminal matters. He is recognized across the United States as an authority on legal and regulatory issues involving digital currencies and blockchain technology. Jason also serves as co-chair of Steptoe's White Collar and Securities Enforcement and the blockchain and cryptocurrency practices at Steptoe. Before joining Steptoe, Jason was Deputy Assistant Attorney General of the DOJ's Criminal Division and served for nearly 10 years as an assistant U.S. attorney in the U.S. Attorney's Office for the Southern District of New York and the District of Maryland. We're also joined by Shawn Davisson, who focuses primarily on white-collar criminal defense matters, government and internal investigations, as well as regulatory enforcement actions, security litigation and enforcement, and foreign corrupt practices. And Katie Dubyak, who also concentrates her practice on white-collar criminal defense, internal investigations, and other regulatory inquiries. We welcome and encourage your questions at any point during today's webinar and ask that you please submit them in the Q&A box at the bottom of your Zoom screen. Without further ado, I'd like to hand things off to our presenters. Thank you.
Great, thank you, Sophia. Thanks so much for the introduction. Thank you to the Global Blockchain Business Council for not only letting us present today, but also for all of the work that you do around the world, to Sandra and Christina, and the leadership of GBBC and all of the ambassadors and all of the members doing really tremendous work to advance the industry and issues important to the industry. So as Sophia explained today, what we're going to be doing is we're going to go beyond today's kind of hot issues. In particular, so much attention has been paid in the regulatory space in the US to the travel rule that we wanted to make sure that nobody lost sight of the fact that there's a lot of regulatory enforcement going on. It's likely to continue, and it's likely to get more intense. So as you can see, you have four members of the Steptoe blockchain and cryptocurrency practice here today. Three of them from our government investigations and enforcement practice group. Steptoe has a broad-ranging blockchain and cryptocurrency practice. We've been active in this space for 5 years. As Katie noted, Jason and I both served in government in law enforcement and security positions prior to coming to Steptoe, where we each encountered cryptocurrency in those roles. So we have a deep understanding of these issues across a range of regulatory areas, as well as in civil and criminal investigations, litigation, public policy, tax, corporate, and a range of other issues. And we're proud to work with companies in this space addressing a range of regulatory issues. And so what we wanted to do today, again, is to go beyond the travel rule and to talk about where we stand. Now, look, everybody knows, and everyone who's on this, who's listening to this webinar now or going forward knows that the COVID-19 pandemic has created a range of opportunities for new blockchain projects and practices, everything from contactless payment to tracing and transaction, to proof of provenance, all of these things that this industry has been focused on for several years now have come to the forefront given the global pandemic. But we shouldn't, we should not forget at any point that even at a time of great uncertainty in the world economy, there's always going to be government enforcement activity, especially in the US, especially with US regulatory and enforcement agencies at the federal and state level. And in fact, we're in something of a period of significant expansion of US enforcement activity in this industry and in others. And we should always remember that US regulatory and enforcement agencies do not view their jurisdiction as ending at the shores of the United States, but rather ranging throughout the world wherever there are companies servicing US markets, intersecting with the US financial system and other restrictions, boundaries, and guidelines for jurisdiction. You know, while some agencies in the US have been more forward-leaning in proactively issuing guidance, entering into rulemakings, discussing issues with industry, historically, US regulatory and enforcement agencies have adopted something of a regulation through enforcement approach, where companies and their counsel are forced to kind of read tea leaves, analyze other enforcement actions, review testimony, dissect speeches by agency officials, pore over the wording of consent decrees and settlement orders to understand and divine kind of the boundaries of lawful and compliant conduct. What we found in our industry is that investment that regulatory and enforcement agencies have made in understanding this space has really started to deepen the bench of expertise at those agencies. And that's paying off for those agencies in their ability to understand and navigate our industry. Many of these agencies are much more crypto literate, if not crypto fluent, with investigators and regulators at work in a variety of field offices and at headquarters on a variety of issues. They're devoting time, they're devoting energy to a more aggressive policing of the space. Now, on the plus side, that's a real sign of maturity. It's a sign of the growth of this industry, growing into kind of the potential that many of the entities and companies that have been in this industry for a while have seen. But the downside is that to a large extent, the time to ask forgiveness, not permission, is passing in many areas. And there is a clear expectation that companies and other entities operating in this space have mature legal and compliance functions. So what we're going to talk about today is a few areas where we're seeing or anticipating particular emphasis in regulatory enforcement. Beyond the struggles around simply the travel rule, its boundaries and its approaches, we're going to peer beyond that and look at some other spaces that it's important for entities operating in this space to keep in mind as you navigate this area, and also talk about how you can prepare yourself to be effective, to be proactive, and to be thoughtful in dealing with regulatory and enforcement agencies, either proactively or reactively. So first I'd like to do is hand off to Katie Dubyak to talk about some of the activity we see coming from the Treasury Department these days, again, beyond just the boundaries of the travel rule. So Katie?
Thanks, Alan. So as Alan said, you know, there's been a lot of attention given to the travel rule and FinCEN's guidance around that rule. But we want to focus on other areas where we see, you know, likely regulatory action in the next coming years. One area where we think there is likely to be significant enforcement actions, and the Treasury Department has said as much, is in the sanctions area. As I'm sure most on this call know, you know, cryptocurrency companies are required to conduct KYC on their customers to make sure that they are not working with any entities or individuals that are on OFAC's sanction list. And what that means is obviously, you know, cryptocurrency companies have to comply with these guidance, but that may even not be enough at times. And that's because depending on the type of sanction, at least, OFAC applies strict liability standards to sanctions reliance. And so, you know, even good faith efforts to comply may not be sufficient. As Alan sort of previewed, OFAC and the Treasury Department generally has said on the record recently that they anticipate devoting significant resources in the cryptocurrency space to, you know, enforcing sanctions and making sure that industry leaders are compliant there. You know, the sort of enforcement involving sanctions in this area is not new, certainly. As far back as 2018, the Treasury Department warned about the possible use of cryptocurrency to violate sanctions, Iranian-related sanctions in 2018. Since that time, there's been a lot of focus on Iran, Venezuela, Russia, and North Korea also potentially using cryptocurrency to evade US sanctions. And so there's been a lot of focus there. As I'm sure many of you are familiar with, you know, this is not a theoretical issue, even though Treasury has said that they're, you know, that they want to, moving forward, devote a lot of resources to sanctions efforts. They've already started to do so. Recent examples of that, as I'm sure many of you are familiar with, Virgil Griffith, who is an Ethereum developer. He was arrested late last year and then indicted earlier this year for traveling to North Korea to speak at a conference where he allegedly gave advice on using cryptocurrency and blockchain technology to evade sanctions and to engage in money laundering. This case is, you know, pretty significant because it's the first example we've seen of a US citizen being indicted for sanction-related violations involving cryptocurrency, but we certainly think that it won't be the last that we'll see, and there'll be many of this moving forward. This case, there hasn't been much action in it yet. Obviously, coronavirus has slowed down the pace of all government enforcement actions, but there was recently a motion to dismiss filed, more on sort of technical grounds of the Southern District of New York not being the proper venue, but stay tuned to see what happens there as far as you know, how the approach that government takes to these types of cases. Another recent example in March of this past year, on the same day, both the Treasury Department announced sanctions and the U.S. Attorney's Office for the District of Columbia indicted 2 Chinese nationals for their role in laundering stolen cryptocurrency that was stolen during a hack involving a North Korean state-sponsored hacker. You know, this case is significant, obviously, because it does not involve US citizens. And I think, as Alan sort of previewed earlier, it is indicative of the fact that the US is being very aggressive about applying jurisdiction even to conduct that occurs abroad or that doesn't involve US actors. You know, I think on that, we wanted to just sort of make note of a few points when it comes to sort of extraterritorial jurisdiction and the US's approach and what we see sort of being their trend. You know, FinCEN's jurisdiction is, the guidance there is not very clear on when they intend to insert extraterritorial jurisdiction, but the sort of standard they use is whether or not the money servicing business is conducting business either wholly or substantially in the United States. There is not much guidance, as Alan said. A lot of times, you know, lawyers are left poring over regulations and public comments about, you know, from agencies to sort of figure out the guidelines. But the FinCEN has said, as far as extraterritorial jurisdiction is concerned, that to the extent businesses are operating using US bank accounts or are providing services to customers located in the United States, that those are instances where they might find that the foreign business is operating at least substantially in the United States. OFAC, as our slide makes clear, also can in certain instances apply strict liability to sanctions violations. That depends in part on the type of sanction that is being alleged. There are sort of primary and secondary sanctions violations. On the secondary sanctions front, which is sort of what is more typically applied to foreign actors, there's a higher standard for foreign actors for criminal violations, but not civil violations, where there has to be sort of proof of knowledge or intent or on the part of the foreign company in order to find a criminal sanction violation. Additionally, for secondary sanctions, they're generally only imposed when the conduct is either knowing, significant, and is knowing, significant, and material. So there is a higher sort of criminal burden standard for foreign entities, but not necessarily for US-based actors. There also can be primary sanctions violations found against foreign actors. This is, again, a little bit more rare, but in instances where there is a sufficient US nexus. Again, the guidance here is not super clear, but OFAC has said that they will find a sufficient US nexus for foreign actors in certain instances where the conduct either occurred in the US, attempts to evade or avoid US sanctions, or attempts to cause a violation of US sanctions in the United States. In some instances, if they are engaging in business involving US dollars, even if the transactions are occurring abroad. So that's an area to be mindful of because that's kind of casting a wide net. And here the concern is with primary liability sanctions that they impose a strict liability standard. So again, even though companies are required to apply fairly strict standards as far as KYC and verifying customers, that may not be sufficient if the US decides to move forward with a primary sanctions case against a foreign actor.
So thanks, Katie. I think that's a great overview. And again, a great reminder of a couple of these key points. Don't just think about FinCEN and don't just think about the travel rule. Think about the range of other FinCEN activities, think about sanctions, think about extraterritorial reach, think about things like strict liability. What we wanted to do is turn now to a couple of the federal agencies. People have done a lot of thinking about about FinCEN. People have done a lot of thinking about the Securities and Exchange Commission. But it's important not to forget the actions of the Department of Justice and the enforcement actions of the Commodity Futures Trading Commission, which was one of the agencies that was early to act in this space, has done a lot of work to engage with the industry cooperatively, but has continued to press its enforcement agenda, not just back in earlier days of 2014, 2015, but all the way up to today. So, Shawn, let's turn it over to you to talk about some of the activity going on with the Department of Justice and the CFTC.
Thanks, Alan and Katie, and hello, everyone. So as Alan said, while Katie touched upon some enforcement trends we are seeing at Treasury with FinCEN and OFAC, I'm going to speak briefly about what we are seeing with DOJ and the CFTC. So whenever multiple federal agencies become interested in the same industry or sector, especially a relatively new area where the framework for enforcement in that area is still, in a sense, under construction, there is often a risk of a law enforcement, quote, arms race of sorts, which can ramp up both the frequency and the reach of future enforcement activity. We are actually now starting to see that very thing happening in our space. So everyone is, of course, familiar with the SEC's work regarding ICOs. But DOJ is clearly beginning to focus more on crypto-related activity. And this appears to be true not only for Main Justice in DC, but also U.S. attorneys' offices across the country. So initially, there was a predictable focus on low-hanging fruit, such as defendants who dressed up old-school fraud schemes in the trappings of crypto. Another area of focus, of course, has been and continues to be on defendants who committed a variety of crimes, but used crypto to move the proceeds of those crimes. However, now we are actually seeing a focus shift, or at least expand, to exchanges, payment processors, and more established industry players. So in addition to the Virgil Griffith sanctions evasions case and the Chinese national cyber attack and laundering case, both of which were just discussed by Katie, there has been other notable DOJ enforcement activity of late. So for examples, in February, DOJ indicted a US national for operating Helix, which is a Bitcoin mixer service that's designed to allow users to send Bitcoin in a manner that conceals the source or owner of the Bitcoin. Now, DOJ alleges that Helix operated in effect as a darknet-based cryptocurrency laundering service. As another example, just last month, after seizing the crypto exchange CoinGather in 2018, DOJ announced an effort to locate any registered traders of the exchange in an attempt to refund their tokens. Similarly, the FBI and DOJ have reportedly been investigating the Canadian crypto exchange Quadriga CX since March 2019 and have continued reaching out to former users of the exchange to alert them of a new portal containing information about the case, confirming that the investigation continues today. And more generally, of course, DOJ has also been advising the public to be on the lookout for cryptocurrency schemes related to COVID-19. Now with the CFTC, we are seeing a similar trend, both in terms of increased frequency and expanded scope of enforcement. The CFTC has become much more sophisticated, as Alan referenced, with the agencies overall, and even has a virtual currency task force. It is clear that they are now focused on more than just market manipulation and spoofing type activity. For example, it was reported last year that the CFTC was investigating crypto exchange BitMEX for potential breach of CFTC rules by allowing Americans to trade on the platform. No resolution has been announced yet in that case. I will now pass the Zoom mic back to Alan. Thanks, everyone.
No, thanks, Shawn. And it's a good reminder again that the Department of Justice remains very active in this space with a clear interest in issues like anonymity and darknet markets. But as you can see, and as we see in the SEC space, investigations beget investigations, beget investigations. And so as individuals and actors and entities show up, either in investigations of malfeasance, failure, crime, the Department of Justice continues to kind of expand its education and its examination of more established entity players, not just the low-hanging fruit and not just the peripheral players in the industry. And likewise, again, although the CFTC has made enormous strides to engage cooperatively with the industry, they continue to pursue an enforcement agenda. So no discussion of enforcement trends would be complete without a discussion of enforcement at the state level. And of course, everybody is familiar with the virtual currency markets report that the New York Attorney General's office put out. Everyone is familiar with the BIT license regime and the regulatory activities pursued by the New York Department of Financial Services. But it should also be remembered that these agencies have investigation and enforcement authorities and are exercising them with respect to entities not only that are licensed and registered in the state of New York, but that do business with entities or individuals in the state of New York, whether they're physically located in the state of New York or not, whether they're even located in the United States or not. Now, of course, the best example to date of the activities of the New York Attorney General's office are the investigative proceedings involving Tether and Bitfinex. Steptoe represents Bitfinex and Tether in that case, so we can't discuss that beyond what we've said and what's been said in court papers to date. But of course, there's been a lot of writing on that case, and it's a good example of the aggressiveness with which state attorney general's offices will pursue actions against entities in this area. We also see on a continuous basis actions by regulators and attorney general's offices in states as varied as Texas, North Carolina, California, and elsewhere, investigating actors in this space, not only on their own, but triggered by other types of activities. So if the state of New York is investigating an entity, it may very well be that another state decides to open an investigation. If the federal government is investigating, if a federal agency is investigating a particular entity, it's likely that one or more state agencies will initiate investigations. And so as we're thinking about regulatory enforcement trends, it's always wise to keep an eye on state agencies and regulators as well. And now you're all familiar with kind of the emergence of stablecoins, and these again are drawing the attention of regulators as well, particularly as stablecoins are becoming more and more a part of the DNA of the digital asset economy. Now, of course, as we mentioned, Tether is one of the first stable coins, has drawn a lot of regulatory attention, but it's not the only coin to do that. And agencies are already focusing and likely to continue to focus on various stable coins, including how they're backed, how they're traded, how they're used. And in particular, entities that administer stablecoins should expect examinations and questions along those lines. And in particular, as more and more money flows into stablecoins, and as they grow in importance in the ecosystem, they're going to continue to draw attention from government agencies. The big question, of course, that everybody's watching is prompted by Libra, which is what happens if one or more stable coins links with the network effects of social media and really kind of all of a sudden becomes ubiquitous. Libra's been praised by a lot of different observers for an ambitious vision, for its capability to drive economic empowerment, and for its willingness to work with regulators, especially after the project met with skepticism from a number of quarters at its outset. But its prospects and its potential really can't be overlooked, not just from an economic perspective, but from a regulatory perspective as well. And should that type of network effect occur, should that type of network adoption happen with a stable coin, regulatory scrutiny is sure to follow, not just of that stablecoin, but of any stablecoin looking to achieve the same type of effects. So how do you navigate this environment? Jason, you have tremendous experience in this area at the Justice Department and with Steptoe representing clients in the cryptocurrency environment and generally. How should companies think about navigating all of this?
So that's a great question, and it's sometimes a multi-million-dollar question to answer. These are rough waters to navigate, especially when you've got such a diverse and enthusiastic, some might say overly enthusiastic, group of regulators and enforcement agencies, often, as Shawn said, in an arms race, competing with each other, both within the group of federal agencies and then between jurisdictions at the federal and state level, to be as aggressive as possible. And what you have to do is think both proactively and reactively and have a strategy for each phase. On the proactive side, now is the time, before you're staring at a subpoena or an inquiry from a regulator and trying to figure out what your next move is. Before that happens, now is the time to look at your compliance program, to look at your business processes, and to plug gaps where they might exist. And in the course of doing so, it is often the case that you find some kind of conduct that is potentially reportable or at least worthy of further inquiry. And the first step should be to talk to counsel to help figure out whether it requires further investigation to help determine whether there are remedial steps you can put in place on your own before that conduct comes to the attention of a government agency. And then it's always worthy of consideration whether the conduct is should be self-reported and whether that's appropriate. That sometimes is the right move and it sometimes is not. But generally, a company's willingness to and its effectiveness at self-policing and addressing and remediating problems on its own before the government gets involved is always an important consideration for U.S. law enforcement if the government does end up getting involved. So on the proactive side, think now and act now before, and try to identify problems before the government comes and tries to identify them for you. On the reactive side, I think the most important thing you can do is to think holistically. It is a hallmark of government enforcement activity in the United States in legacy industries, whether you're talking about financial services or manufacturing, engineering, automobiles, you name it. When it rains, it pours. And that means that when you're defending an action in a legacy industry in the United States, you're never just playing one-dimensional chess. You've almost always got DOJ, other federal agencies, often the SEC, state AGs or other state enforcement authorities, sometimes even some district attorney's offices. So, in certain major cities, you've got DA's offices that are as aggressive as any other regulator at any other level of government. And besides all those government agencies, you've got class actions, because where the government enforcement agencies go, the class action lawyers follow. And sometimes it's the other way around. Sometimes the class action lawyers get there first, but they're usually going in the same direction. And you're often dealing with them all at the same time. So that means that in legacy industries, you're always playing 3, 4, maybe more than 4-dimensional chess when you represent companies in those industries. And of course, even more dimensions to this chess game from hell if you've got overseas agencies involved as well. So as Alan said, it's a sign of growth of our industry that we're now seeing this phenomenon impact our companies. And that's not exactly a cause for celebration, but as Alan suggested, it is kind of a form of validation. I guess it's in a twisted sort of way, it's the ultimate backhanded compliment from the government that this industry is taken seriously enough that it's now being enforced and policed in the same way that I just described for legacy industries. So what does that mean for companies in our space that do find themselves on the business end of a subpoena or an investigative demand or some other kind of inquiry from a local state or federal agency? Well, even if today it appears that your issue is with one agency or even one level of government, that very likely will not be the case tomorrow. And if it seems like it's just a government problem today, if you can have just a government problem, it very well may be a matter for civil litigation tomorrow. And so that means that you have to consider all of these dimensions at the same time: potential criminal exposure, regulatory exposure that's more of the civil variety, and private party civil litigation, often class actions. And so your approach to defending any of these matters has to be to think about all of those potential matters. So you have to think holistically with due regard for the collateral consequences. And it's just one example. There are many examples of how your engagement with one agency could impact your ability to resolve things with others or your ability to defend yourself in class actions. But perhaps the simplest explanation or simplest example is when it comes to statements of facts. If you resolve a matter with one government agency, especially at the federal level, and there's a statement of facts that describes the conduct, in certain circumstances, the requirement of a resolution is that you admit to those facts. And the admission of those facts becomes binding on you in other legal forums, including in other regulatory actions, and is used against you or usable against you in civil litigation as well. So you can't make judgments about the right way to engage with one regulator without thinking about the others that are either there or coming, and importantly, without thinking about class actions and other civil litigation too. So, congratulations to us. We've now matured to the place where we now have to think strategically the way that people do in legacy industries. And so thinking strategically means considering how the decisions you make in dealing with one agency impact your dealings with others. And as I said, impacts your ability to defend yourself in private party litigation. That is the approach that we've always taken and that other lawyers in our space have taken when it comes to representing traditional industries. And it's increasingly becoming the approach that we have to take in representing companies in the crypto space. Look, nobody likes lawyers. Nobody likes to pay lawyers. We get it. It's an occupational hazard. But one job of your lawyers is to see around corners. And when it comes to U.S. enforcement and regulatory activity in our industry, there is nearly always something around the corner. And so you and your lawyers need to be alert to that now more than ever before.
Well, great. Thanks, Jason. So I think that gives a good overview of kind of some of the other regulatory enforcement trends that we're seeing. Some of the important things to think about, and really some of the ways to think about how do you navigate this environment with the seriousness and maturity with which the regulatory agencies are now expecting of our industry. So Sophia, we'd be happy to take some questions at this point from the folks on the webinar or folks who have submitted them before.
Excellent, thank you. Well, we have had quite a few questions roll in, and I'll just kind of go down the list here. Someone asks, with the November election coming up in the US, if you foresee a shift in the enforcement step up in 2021 if there's a new administration.
So that's a great question. And Jason, you've kind of rolled through presidential transitions inside government and at Steptoe. What's your sense of where things sit?
So, it was a common theme when in 2016 happened. There was a lot of attention paid to whether there would be a decrease in corporate criminal enforcement at DOJ with the Trump administration versus an Obama administration or a potential Hillary Clinton administration. And while there certainly is a different emphasis, and there's a de-emphasis on the regulatory side, there's less environmental related prosecutions, and there seems to be an emphasis on deregulation in certain spaces. For the most part, the types and volume of enforcement activity that DOJ has pursued when it comes to corporate potential criminal activity has really stayed the same. And some of that is because the prosecutors who are doing the work and the people who are doing the work every day are career people. They're people who, like me, as Alan said, I think I served through 4 or 5 different administrations of different parties, and these folks do too. And by and large, when they make a commitment to an enforcement program in a given industry, they stick with that, and that investment remains even as the administration changes. And so as we're approaching another election, and there may be a change in administration, I would expect this still to be a very heavy area of emphasis. The reality is that these government agencies, not just DOJ, but others, made significant financial investments in building up their capacity to do these investigations over the last several years. And those investments are not dependent on who the president is or who the attorney general is or who the U.S. attorney is. Those are investments the department's making and that it will continue to reap the fruits of in years to come. So my expectation is that all the trends that we're talking about here are going to be insulated from whatever the outcome of the election is.
Thank you. It's very helpful. Another question. Foreign crypto trading platforms continue to offer services to Americans. They're wondering, should there be, or do we need more global coordination in terms of probably regulation and enforcement, and maybe not allowing Americans to access those services?
So I think, there's 2 dimensions to that question. Number one is, we're seeing the attempts at global coordination through, again, efforts like the US successfully launched at the Financial Action Task Force when it had leadership of the group to drive more cryptocurrency regulation, including the travel rule, into FATF's global standards, which are then intended to be adopted by other countries. And we've seen challenges, some countries adopting it, some countries not. Many countries have different approaches to both regulation and enforcement to the US. But, Katie, Shawn, you also talked about extraterritorial reach of US regulators regardless of the coordination. So, thoughts that you have on non-US entities that are servicing US customers. What are some of the considerations that they should have, regardless of whether there's coordination or not among regulators? I don't know, Katie, if you wanted to start with that.
Yeah, sorry, I was muted. Yeah, I think there are companies that are clearly, getting increasingly frustrated with sort of all of the various agencies that Jason talked about at play, and defending themselves from multiple attacks, and are increasingly just trying to exit the U.S. markets altogether because they don't think it's worth it to have to deal with all of these competing regulatory schemes that don't have clear guidance. But as Alan said, that may not be enough. Just trying to simply withdraw from the U.S. markets, not service U.S. customers. The U.S. has been very aggressive about applying extraterritorial jurisdiction to cases. And so I think, the best sort of advice that can be given is just to really be familiar with, the U.S. sort of regulatory scheme and the types of conduct that might result in strict liability, as I mentioned earlier. In the sanctions regime, if the conduct has a U.S. nexus, even if there is an effort to sort of avoid the U.S., that might be enough to impose strict liability on a foreign actor. So sort of knowing that, being aware of it, being aware of your conduct, being aware of your customers and who you're dealing with, I think is critical to sort of trying to navigate all of these complex different regulatory schemes.
Yeah, exactly. Shawn, any other thoughts on kind of extraterritoriality and issues of that nature?
No, I think both you and Katie covered it perfectly.
Yeah, again, it's regulatory coordination is a very difficult thing to happen. It will happen over time. It will happen episodically in pieces. Companies that operate overseas that service U.S. customers or don't know whether or not they service U.S. customers really need to be aware not only of their host country regulatory regimes, but also of the reach of U.S. Regulatory and enforcement agencies to their activities if they're servicing U.S. customers, holding U.S. bank accounts, et cetera.
Thank you. We had a question from someone come in who attended a recent American Bar Association conference, and I guess shifting our questions a little bit, we discussed how at the conference they discussed how law firms are vulnerable honeypots of confidential information. They're wondering if you have any thoughts on increasing hacking and malware attacks on info honeypots and crypto being the preferred payment method for the hackers.
Yeah, this is a really interesting issue and one we've been looking at for several years. And both Jason and I had cybersecurity responsibilities in the U.S. government, among other issues. I mean, first and foremost, these are cybersecurity issues, and they are questions about how do you best construct your cyber defenses, and then how do you construct your cyber resilience schemes, since attacks always favor the attacker, and the defender has to be perfect all the time, and the attacker only has to be perfect once. So certainly law firms, like anyone else, need to make investments in their cybersecurity activities, and they should understand how cryptocurrency works. And not only should they be faced with an activity where their cybersecurity activities break down and they are compromised in some way, but in order to effectively counsel their clients in those types of circumstances as well. Jason, if you had other thoughts on that.
No, I would just say that I think this is true really in the legal industry across the board. There probably is no area where most big law firms like ours have made more strategic investments than cybersecurity, both because law firms or lawyers generally are obvious honeypots, and because the number and nature of these attacks has increased over the years. So it's an area that as I said, is a huge area of investment and focus for our firm, and I'm sure for every other firm like ours. And it's something that we have a robust IT function that thinks about this all the time. We are one of the only firms that actually accepts cryptocurrency as payment for legal fees. So we've got a lot of familiarity, the firm does, with how crypto works, not just on the legal side, but on the business side. But this is an area where the IT people at law firms wake up every day, at DEFCON 1 and go to sleep at DEFCON 1. So it's certainly something that anyone who's a potential source of large volumes of information that hackers can want, has to think about this 24/7.
I would also just add to the point I think that we've all made throughout this session today is I think this just underscores the creative ways in which people are using cryptocurrency to try to violate the law. And as criminals get more creative, I think the government will enter different areas and sort of enforce in different ways as well.
And I think it's an excellent point, and just puts an onus on everyone in the industry, whether it's whatever function you perform at a company in this industry, any function if you perform functions in a traditional financial services entity where there's intersection with the cryptocurrency, crypto asset industry, and certainly for lawyers who practice in this space, a familiarity and an understanding with the ways in which cryptocurrency is used, the ways in which criminals try to exploit the technology, and the ways in which cybersecurity, and cryptocurrency, crypto assets, and business operations intersect. This is almost essential knowledge for everyone at this point.
Thank you, Alan. We're coming up on the hour, but I'd like to offer you, Katie, Shawn, Jason, if you have any closing thoughts for our audience before we end the session.
Sure, maybe we'll go in, Jason, if you wanted your quick 30-second closing, last thing you would like companies to be thinking about. And
Sure. Yeah, sure. Thanks, Alan. So look, one of the things that is true in, to continue the theme I was striking before, in legacy industries, it is now increasingly true in ours. It doesn't matter what percentage of your business, your revenue, your customer base is in the United States, and it doesn't matter even if you believe you have shed your ties to the U.S. If whether you have a 0.1% tie to the U.S. or 99% of your business is in the U.S., it doesn't take much for U.S. authorities to assert or attempt to assert jurisdiction over your business. So just to build on what Katie said before, U.S. enforcement agencies are historically the most aggressive in the world. And even if a small percentage of your revenue comes from the U.S., a significant percentage of your time and legal expense and energy could come defending regulatory and enforcement actions in the U.S. So if you are an overseas platform or work with one, and you are considering what your jurisdictional risk in the U.S., that's the kind of question you should be asking now. And you should be asking whether the potential risk is worth the business benefit of being able to service the U.S. market to some degree. And if your business decision is that you do want to continue to service the U.S. market, you need to always think about these regulatory enforcement risks at every stage and prepare yourself as best you can, because you're going to get attention, and that attention is going to be intense and often expensive. Even if you've done nothing wrong, the cost of dealing with an investigation is to your business and to your bottom line is significant.
Shawn, 30-second last thoughts for folks who are listening.
Yeah, I would just echo the same thing, that it's easy to say that just remain vigilant. But it's truer in this space, perhaps, given that it's evolving, developing fast and evolving quickly. You have to be vigilant, as Jason said. Even if you do nothing wrong, or you think we're covered, or we're not doing anything that being focused on now by regulators, that can change very quickly. So it's both, as Jason said earlier, both taking a proactive and a reactive approach as this sector and the enforcement thereof just keeps evolving over time. And as we discussed, it's an arms race, and the U.S. is going to be aggressive, and they're going to keep being aggressive, and we have to sort of stay out in front of it.
Katie, last 30-second thoughts.
Yeah, I think I would just echo everything that Jason and Shawn already said. I think, as Jason has said, the good news here is that I think, the government's interest in this industry in general is showing that they're seeing it as, a legitimate thing that needs to be regulated like every other industry. The bad news is obviously it draws government attention. But I think obviously, educating yourself, as I said earlier, is the best sort of proactive way to try to, avoid the government's attention down the road. So.
No, that's great. And I would just say, again, as Katie said, it's flattering to the industry. We've matured, the industry has matured, and it's now getting the attention that traditional industries get. So what it means is that whatever you do, your corporate structuring, your business operations, your compliance activities, everything as you think about what you're doing, there should always be the thought about the regulatory investigation and enforcement layer, the scrutiny, the audits that are inevitable, that will inevitably come, and that you want to be best positioned for should they happen, should they come, and should you end up being a target of an investigation or enforcement action. And finally, thank you again, Sophia. Thank you to the GBBC for giving us the opportunity to talk to members today. We appreciate it, and we hope that that folks have found it useful.
Absolutely. I'll echo the comment in the Q&A section. Thank you to the Steptoe team. I think many folks have found this very informative. We'll provide a recording of this to everyone who was on today's call and share it online for those who weren't able to join in person. Thank you for your time. Thank you for joining us. If I didn't make this clear in the beginning, these GBBC virtual members forums are open. Next week, we'll have the BitFury group, so please join us. And we will provide follow-up information so that you can reach out to Steptoe and find their resources online to continue learning more. Thanks so much, everyone.
Thanks, everyone. Thanks, Sophia.
Thank you.